Chaos grips the markets. Panic ensues. Altcoins down 99%. Welcome to crypto, my friend. And welcome back to Blockchain Basics. In today's video, we have a whole lot to talk about. So let's jump in. Recently, we've seen the Dow Jones fall over 15%, taking out the previous lows from February and invalidating the idea that this was an ABC correction. The S&P fell 20%, forming a head and shoulders pattern, traditionally considered a topping pattern where you have a higher high followed by a lower high, although there are many examples where this pattern does not necessarily mark the top. But if we continue to follow this pattern, it would suggest that we're in for a fall that is similar in size from the fall that we saw from the head down to the neckline. And so that would look something like this, where we'd likely get down to test or even go below the 200-week moving average, which right now is at 3,400. So the Dow fell 15%, the S&P down 20%, the NASDAQ has fallen 30%. Of course, it's even worse over in the crypto market, where a 30% drop is not known as a bear market, but as a Tuesday. Bitcoin is down 63%. Ethereum is down 65%. This crypto here is down 77%. Oh wait, no, that's Netflix. Never mind. Everybody's favorite dog coin has fallen 91% from its all-time high. And let me take this chance to remind everyone here about the herd of sheeple that showed up last year screaming about how they had bought Dogecoin at 40 cents or 60 cents and it was going to hit $1 and they would have doubled their money. Of course, they ignored the fact that Dogecoin had already risen 12,000% at that point, and well, now they're enjoying a 91% bear market. So at this point, you might be thinking, it can't really get much worse than a 91% crash, right? Yeah, well, hold my beer. Because Luna, once a top 10 crypto with a $36 billion market cap, crashed from a high at $120, basically down to zero. Currently trading at 0.0002. That's a 99.9% loss. And this has really been the talk of the markets this week. So I'll briefly explain what exactly took place for this to happen. But this is also a good time to highlight that you really have to be careful what you're invested in. That's why I've suggested to all of you that something like half or more than half of your crypto portfolio should be in Bitcoin and Ethereum, because really you never know what random coin, even a top 10 coin, is going to fall off the face of the earth like this. So to give you a brief idea of what the heck happened to cause this massive crash, the cryptocurrency Luna is associated with a stablecoin called Terra USDT. And stablecoins are cryptocurrencies that aim to peg themselves to the US dollar, meaning the price should really never fluctuate from $1. And there are several stablecoins in the top 10 cryptocurrencies. Altogether, this is a $100 billion market, the largest being Tether, the second largest being USD Coin, and Terra USDT was the third or fourth largest with a market cap around $13 billion. And normally, stablecoins work by backing each coin with a US dollar reserve or another asset so that at any point you can sell your stablecoin and the money is there in order to pay you back. Similar to how the US dollar used to be backed by gold. But Terra USDT worked a little bit differently through an algorithm where when people sold their USDT coin, the algorithm would create $1 worth of the Luna coin and sell it on the market in order to have the money to buy back the USDT coin and keep the stable coin at $1. So maybe you can already guess where this is going, but when the market started to crash, there was so much liquidation pressure that Terra USDT depegged itself from the US dollar, at first crashing down to 98 cents, which caused the algorithm to start minting a whole bunch of new Luna coins. But instead of returning to $1, it just crashed the price of Luna, which then meant the algorithm had to print even more Luna in order to try to return the stablecoin back up to $1. And basically, this created a feedback loop that resulted in both coins getting completely destroyed. And now the stablecoin that was once supposed to be always pegged to $1 is trading all the way down at 16 cents, and Luna is just completely obliterated, going essentially down to zero. And this has wiped out something like $30 billion from existence. So all this to say, it's a scary time no matter what you're invested in. The only asset that seems to be doing particularly well right now is the US dollar, which is now at 20-year highs compared to other world currencies, as measured by the US dollar currency index. And this is pretty ironic considering that consumer price inflation is at 8%, meaning that even your dollars are losing 8% of their value every year. So, okay, is this a time to be selling into the fear and buying up dollars, or is this a time to be buying the dip? Of course, don't take my word on anything. This is not financial advice. I'm not trained as a financial advisor. I actually thought the bottom of the market was back in February. Obviously, that was wrong. But I've had this overarching thesis throughout pretty much every video I've made, which is that the top of Bitcoin was likely already in as of November. When the Bitcoin market cap chart hit its Fibonacci extension, so did Ethereum, so did the S&P 500, and these were major long-term price targets based on previous bubbles, and everything since then has really been trying to make sense of short-term price action. And in my mind, the question now is whether this is the beginning of a major crash that will take us much lower, or if we're going to be finding a bottom shortly and continuing on higher, at least for part of the market, if not everything. In the first scenario, as far as how deep the bear market could go, I'd say we'd be looking to find support in the stock market on top of these levels back here in 2014 to 2016 that served as resistance and then support in the COVID-19 crash. Or in a worst case scenario, on top of these levels back from 2000 and 2008. And if something like this was going to happen, then this right now is certainly not a buy the dip opportunity. In fact, we'd have quite a bit further down to go before the dip seems somewhat reasonable to start buying. And really briefly, what is some evidence for this scenario? First, these are just major areas of resistance in the past for very long-term price action. Second, we've been seeing this expanding wedge pattern where we are continuing to put in higher highs and lower lows over the past 4 years. And it has done so at an increasingly exponential rate over the last 2 years, where the slope of the increase is much greater now than in the past 10 years before that. And finally, we've seen that at the end of major bull markets, there is generally a 50 or 60% drop that comes in, which would put us in line with this first price target around 2100 or so on the S&P. And in this scenario, what happens to Bitcoin? Well, we know during ordinary bear markets that we have about 85% corrections that come in after major bull runs. So from $69,000, that would put us somewhere around 10,000, maybe 13,000, depending on how far down we went. And there's quite a bit of support down here for that to happen. However, Bitcoin has never existed during a stock market collapse. It was created in 2008 during the Great Recession, and there has basically been a prolonged bull market ever since then. So we really don't know how Bitcoin will behave in that sort of situation where the stock market is crashing by 50%. And I've heard good arguments for Bitcoin coming down even into these areas down here somewhere between $2,000 and $5,000. at which point the narrative would probably be that Bitcoin's going to zero and you'd have to be a fool to buy it. But guys, I'm telling you that this could literally be the best opportunity any of us are ever given to build true wealth. Just consider for a moment what the next market cycle would look like. We know that Bitcoin follows Fibonacci extensions. It has done it again and again. What does a Fibonacci extension look like from $69,000 down to, say, $10,000? That would put us above $200,000 per Bitcoin as a price target. Is that unrealistic? Is that crazy? Well, look at the numbers. It is only as crazy as saying a couple years ago that Bitcoin would make it to the levels it made it to. So that's the bearish scenario. And if that is what's going to happen, the absolute most important thing is to make sure you have the cash sitting around to invest when those low prices do show up. In fact, I would say that is way more important in trying to plan for scenario 2, even though scenario 2 may actually be the more likely one to occur. And scenario 2 is exactly what I've been talking about over the past several videos, where at least some assets start to head into a retracement. And as some assets head into a retracement before they continue their fall further, other assets may break out into new all-time highs. And perhaps we even see a scenario where almost everything is breaking out into new all-time highs. And just consider, for the average investor, the temptation to buy back into the market, knowing that their cash is losing value to inflation every week, seeing people on Twitter talk about how great their investments are doing. And we know that many times at the very top of market cycles, there is a sentiment that draws people in. Just like people got drawn into Dogecoin at 70 cents, just like people got drawn into Bitcoin at $60,000. There will be a media narrative urging people to jump into the markets. And that narrative is exactly designed to get people in at the very top, because the rich and powerful that, surprise, control the media need someone to sell their bags to. If you're buying the very top, who do you think is selling it to you? So, even if we do head back into all-time highs, I think we need to be extremely careful. Now, that doesn't mean that if you own no crypto or you have no stocks, that it is a bad idea to buy a little here or there on major dips like this. Many of you watched my video on how to create a $2,000 beginner's crypto portfolio, and even now, if I didn't own any crypto whatsoever and had some cash sitting around, I would take this recent crash as an opportunity to invest. Whether that's the right thing for you or the right thing to do in general, I can't say. In general, we know that it's true that time in the market beats timing the market, but we also know that there are very bad times to be going all in. So my strategy is to remain cautious, not to sell into the fear, also not to be overly greedy, and to be slowly accumulating cash to be ready when the next 50% crash comes in the stock market and when the next 80% crash comes in for Bitcoin. And I do believe both of those will come, likely at the same time. So I'll leave you with these final words of advice. Bull markets may make you profits, but bear markets make you rich. And as always, thanks for watching.